Welcome to Investors Insights. Our topic today is From Sea to Shining Sea. We've got a lot going on in this country, and we've got a lot going on either side of the oceans. Everybody agree with me?
Yep. Yeah,
and that's why we picked the topic today. Bobby, start us out because our clients are calling in regards to the China tariff, all these negotiations going on. Talk about that.
Yeah, so for the fourth week in a row, the trade talk and the banter back and forth has caused volatility in the market to trade back. Again, 4 weeks in a row, we're dealing with this. On Friday, China said it would impose an additional $75 billion on U.S. imports. That includes a 25% levy on U.S. autos. And so what we've done is we've included a chart here that shows sectors hit hardest by the new tariffs, and they are electronics, machinery and engines, aircraft parts, medical instruments, and vehicles, among others. But here's the thing, here's what's interesting, and here's what is a conundrum for China, that they are imposing tariffs on components of parts and products they end up exporting out. And so they are hurting their own exports by putting tariffs on the imports. And so how long are they going to continue to do this? How long is this going to go back and forth? But I'll say this, and one thing is a concern for us, as we're looking to see what impact this has long-term on the markets, we're starting to see the consumer numbers take a hit. So for the past couple of months, the consumer has been very strong. Past 2 weeks, we're starting to see some reports of, okay, that this is getting real. And so that, again, that impacts the market long-term, and that's where we truly have a concern.
Well, but let me say this. I want to emphasize, and we had this discussion, is that you hear and see the headlines, but you got to drill down on the details. So what you just said there, the Chinese have made headline news, but in reality, they're hurting themselves.
Exactly.
So the motion and volatility in the market remain calm. It's like somebody yelling fire in the middle of a civic center and everybody trying to rush to the doors, and maybe somebody just saw a little smoke. Does that make sense? And this is going to continue volatility in the markets. We also, from a technical analysis standpoint, the S&P 500 closed around 2,847 on Friday. That's very close to the August 5th lows of 2,822.12. The point being is that if it bounces off of that number, it goes higher, we're still seeing buyers in the market. If it breaks through that 2,822, the next support level is 2,802. And we tell you that just so you can kind of watch the indices out there or the S&P 500, just to understand that we're watching it not only on fundamentals, but also technical analysis. Yeah. And then, Ashley, from sea to shining sea, yes. You talked about what's going on in this country. Talk a little bit about that.
Yes, two quick things. One is we were talking to guys and I were talking this morning was the Keystone Pipeline. Over the weekend, or really to be correct, late last week, the Nebraska Supreme Court upheld it. So what that means is it's really only the Supreme Court of Montana left, and that's probably going to clear out too. Once that does, that's going to be a huge infrastructure project in the middle part of the country. And as we always say, you can make a certain amount of revenue line on the tariffs, but you can lower your costs too, and have your net income and a company on earnings be as high or better about cost structure. It's like Greg said, after technology, this energy revolution is the next phase to do it.
We're energy independent.
We really are. And as Keystone, the other thing we've been watching too, to Bobby's point on manufacturing, the service sector is still good. But there's a group we follow called Capital Economics that sort of watches manufacturing data. There's sort of a worldwide manufacturing contraction going on. And for the last 25 years, that's pretended a more broad slowdown. So to Bobby's point, in the chink of the armor you're starting to see a little bit, it would be good to get that slowed down because it's a very, very reliable indicator of economy, including service.
Okay, yeah, and so from an economic standpoint, Bobby, you're saying consumers starting to slow down, but we've still got a lot of job opportunities and infrastructure going on. Energy as a sector creating new jobs is going to be huge for the next, maybe 20 years if they continue at this pace. Exactly. And then Adam, we're over here and a lot of people are so engrossed in China and the volatility being created there, they're not paying attention to Europe. Yeah. And you addressed that in our meeting this morning.
Yeah, there's no secret. There's a whirlwind of noise surrounding the U.S.-China trade deal. We get a lot of client questions going back to your earlier point of how's the rest of the world kind of view us. I'm going to hit on Europe real quick. Europe is currently putting together a $110 billion stimulus plan to catch up with U.S. tech companies. That's a huge plan. I mean, that's a lot of money going in to try to catch up with the U.S. and China.
much so.
So from another standpoint too, Prime Minister Boris Johnson of the UK is 3 months away from the helm of Brexit. Brexit's a big deal. At the G7 summit, which is the 7 biggest economies in the world, as they met, they're alluding to the administration and the UK putting together one of the biggest plans they've ever had after that 3 months is over, after the Brexit is completed. In addition to that, with France, in July, they put a 3% tax on U.S. tech. So what they're talking about now is drawing up a draft to repay that 3% back. So as we see U.S. and China kind of be, the talk and the noise of everything going on, there might be some future relief in other areas, such as Europe.
So we are still very pro-U.S. at this point, but cautious. Is that correct? Everybody agree?
Absolutely.
So in terms of our portfolios, what we're investing in, at the same time we're keeping our eye on the international front just in case buying opportunities come along. So we hope you have a great week. We hope you've gotten a lot of valuable information from this to understand that in all of the chaos and all this noise, let's look at the details and see where we're heading down the road. We're going to keep you updated. We thank you for sharing this with your friends, family, and colleagues and taking time out of your schedule. We hope you have a great week, and we'll be in touch.